get started. This is Crypto Corner. It is the 6th of April, and today we're going to talk about some of the hot topics of the day. But first, a quick market analysis, because looking at the markets, things are not looking great. We're having still a pullback in Bitcoin, and it's dragging the whole market down with it. It is 44,700 right now, almost 4% down since yesterday. Yesterday, actually, it dropped, so today is the continuation of that, and the altcoins are suffering much more. I mean, Ethereum is down 5.24% to 3,300. BNB is down 4.33% to 434, almost $435. Solana 121 today, almost 9% down. This is a much bigger drop than some of the other altcoins. Taro also big drop, 6.28% down to $110. XRP is around 4% down. Cardano is 7.73% down to $1.11 right now. Avalanche almost 10% down. This is the biggest loser in the top 10. It is $86.21 as we speak. Dogecoin is almost 4% down, and Polkadot a bit of a bigger drop, 7.55% as we speak, $20.90, and it's now in the number 10 position. It managed to get replaced by Dogecoin right now as we speak, and this is without counting the stablecoins, because if I turn on stablecoins, then DOT is out of the top 10. With stablecoins counted, Polkadot is number 12. So not great for Polkadot. Yesterday, actually, we did a deep dive in Polkadot and some of the parachains that are in its ecosystem. So if you missed that video, make sure that you catch it. It will be linked at the end of this one. And I invited a friend of mine from Cryptos Chain to discuss, because his channel is very focused on Polkadot and all of the different parachains and other projects that are forming its ecosystem. So he was the best person to really talk about this. And he even said that Polkadot probably this year is not going to make any big moves, but next year there will be things coming up. So definitely Polkadot as a long-term plan is one of the tokens in my portfolio. As a longer term, as you know, I don't really keep altcoins very long term, but longer term, I mean 6 months to a year, it's okay for me, unless I see a bear market coming. And right now I'm really watching closely these price levels here, these support levels. We are definitely heading towards this support here at 44,000, and then we have another support here at 42,900. So definitely these two price levels are important. If we break these levels, then we can look into a prolonged bear cycle. But for the moment, these are holding, so it is a little bit too early to talk about that. I will be doing a proper market analysis over the next couple of days. But for today, I actually want to focus on some of the news. Lightning Labs has raised $70 million to bring stablecoins to Bitcoin. Now, this is a headline that caught my attention today, and I don't see much coverage on this, so I thought I should disclose what this means for Bitcoin. First of all, Lightning Network has been around for a while now. It enables cheaper, faster transacting with Bitcoin. It's a second layer built on top of the Bitcoin protocol, and the Lightning Network is an independent network. The transactions that occur on that network, they are basically using its own protocol outside of the main Bitcoin blockchain, thus reducing energy and the time spent processing these transactions. Later, these transactions are recorded on the main Bitcoin blockchain, often as one bulk transaction, thus reducing the amount of transactions overall, and this way users can send and receive Bitcoin with very minimal fees. Then we also had last year a major upgrade to Bitcoin's protocol called Taproot, which opened the door to smart contracts being built on Bitcoin for the first time. I reported on this. Taproot provides efficiency, privacy, and flexibility gains to Bitcoin, but only if it is built into tools for users by developers. And now we see what might become possible when Taproot is put to work. There's a new protocol called Taro. It is Taproot powered, and it aims to bring low-fee stablecoins and other asset transfers to Bitcoin Lightning Network. In addition to supporting multiple asset types, the new protocol will allow users to perform cross-chain atomic swaps, eliminating the need for centralized exchanges, and all major wallets will be supported. Taro aims to give developers the flexibility to move stablecoins from the Bitcoin network to the Lightning network while maintaining the privacy and the security of the Bitcoin network. So we're talking about faster transfers secured by the Bitcoin blockchain. Co-founder and CEO of Lightning Labs, Elizabeth Stark, shared this at the Miami conference, which is currently ongoing. Apparently, they already raised $70 million to further the development of Taro to improve Bitcoin's functionality, which is great news. So how will this work? Well, Lightning Labs describes Taro as an asset overlay network on Bitcoin. The security of Taro is based on embedded consensus, which means that transactions on Taro include Bitcoin data that needs to be verified on the Bitcoin blockchain. So transactions of stablecoins and other digital assets will be secured by the Bitcoin blockchain. Well, that's cool. There are additional rules to govern that data as defined by the Taro protocol, similar to how Lightning Network is an overlay network that uses Bitcoin smart contracts but has its own set of rules to enable the instant transfers, for instance. And also, Lightning Labs released the technical specifications for Taro as a Bitcoin improvement proposal, BIP, so that the protocol can be built with the feedback from the broader developer community, which is the way to go about it. I'm glad that they did that. A critical distinction between Taro and other stablecoins like UST on Terra, for instance, is that Taro is only the infrastructure to enable the movement of assets over Lightning, whether they are the stablecoins or other assets. Taro itself is not a stablecoin, but just the infrastructure to enable that movement of assets. Developers still need to build projects using Taro. Lightning Labs is still a small company with only 24 employees, so this $70 million funding should go a long way to enable and encourage building of a number of applications. We were talking about DeFi applications and even NFTs on Bitcoin. This was last year when Taproot was about to be activated, but I don't think we need that on Bitcoin. Quite frankly, the more stuff we build on top of Bitcoin, the more heavy and slow the network will become. So building on top of Lightning Network can be a good way to go about it, I personally think. And now let's talk about the Metaverse. This is the next topic that I want to talk about. Apparently, despite all the interest from venture capital and the world's major banks, the Metaverse is actually struggling to attract users right now, and the token prices have begun to reflect this. Well, tokens for the three major Metaverse protocols, Decentraland, Axie Infinity, and the Sandbox, are all down from the beginning of this year and significantly underperforming compared to Bitcoin, as this chart shows, and as reported by the CoinDesk here. In the past 30 days, the number of Axie Infinity's average daily users has dropped by 30%. Then the Sandbox has fallen 29%, so almost 30%. Decentraland has lost 15% according to data provided by DappRadar. For Axie Infinity, it's impossible to determine how many of these players are actually there just for fun, rather than as employees of guilds playing the game to actually earn yield for investors. And the report also notes that gamers appear to be somewhat hostile to GameFi. Gaming giant Ubisoft's NFT efforts fell flat. An industry survey published during the Game Developers Conference just recently showed that most studios are not interested in embracing crypto or NFTs, much to my surprise. I was under the impression that GameFi is getting a lot of interest and a lot of traction, and that with all the exposure it will be getting even more. Clearly not so much as I anticipated. In any case, we are still in the early days of this sector, and as the article points out, gameplay actually still needs to improve for the users to grow organically, and as with every new technology, things get improved over time and user adoption grows. So this only means that the Metaverse needs more time and better UI in order to thrive. And I think this will happen. It's inevitable. This is my take. Now let me know what you think. Do you think the Metaverse has a bright future, or do you think it was just a buzzword that became really trendy last year and now things are dying off and it's never going to take off? I'm curious to know what is your take. Let me know in the comments below. This episode of Crypto Corner is sponsored by DYOR, an exchange that I have been using for well over a year already. They operate in 150 countries with licenses in USA, Estonia and Singapore, and provide spot and leveraged trading on numerous assets. Not only they have loads of cryptocurrencies, including some of the newest coins to hit the market, but also derivatives such as crude oil, precious metals, gold, silver and more, stocks such as Nasdaq and MiniDAO, and they offer up to 100x leverage on many of these markets. What I find very useful is that on spot trading they separate cryptocurrencies in groups like DeFi tokens or proof of stake tokens or tokens from the Grayscale Trust portfolio or Binance Smart Chain tokens and so on. This makes it easier when I want to focus only on a specific category of tokens, and they keep adding more and more assets. They have tripled the list of supported coins since I started using this exchange, so there's a much better choice already. In terms of security, they keep the majority of their funds in cold storage with only a smaller portion in hot wallets that are used to pay withdrawals, and all withdrawals are manually approved during working hours only, so there's less risk of violations or exploits. They offer a copy trading service, so users that aren't very experienced can take advantage of those who are more skilled and make profits by copying their trades in an automated and uncomplicated way. You can go through the stats for each trader and choose what amount to allocate to them, and you can choose multiple traders to copy at the same time. You can use it on a desktop or mobile. Their app is on both Android and iOS, so it's easy to use it on the go as well. As I said, I've been using this exchange a lot throughout the past year, and their customer service team is very responsive, unlike many other exchanges where I've had to wait for days and weeks sometimes to get any response. DYOR has a live chat service, so you can find assistance pretty fast. They also offer up to $258 in various bonuses for new users, so grab the invite link from the description below to register and find out more. Alright, well, this wraps up today's episode of Crypto Corner. You are now up to date, and I hope this brought value to you. If it did, please show your support by leaving a like and a comment below. Or if you're new to my channel, hit the subscribe button and enable notifications so you never miss an episode. Also, make sure that you check out the links in the description below, where you will find links to all of the crypto services that I'm personally using and that I recommend to you, including exchanges, hardware wallets, charting tools, and other services that I use to earn interest on my long-term crypto holdings. My ebooks as well. These will help you get a better understanding of crypto and to navigate safely in this industry. If you want more valuable crypto content, follow my blog crypto-corner.com or scan the QR code here and sign up for my bi-weekly crypto newsletter. It's free and it's packed with market analysis, news and other insights to keep you well informed. Thanks for staying until the end, and I'll see you in the next episode.